In 1590, Spain was the richest empire on earth. They controlled nearly half the world's gold and silver reserves. Their military dominated Europe, and their currency was accepted everywhere. Within 80 years, Spain declared bankruptcy 4 times, stopped producing domestically, became entirely dependent on imports, and collapsed into a secondary power that never recovered. In 1914, the British Empire was the largest empire in human history. The sun never set on its territories. The pound sterling was the global reserve currency. Within 40 years, the empire dissolved, the currency collapsed, and Britain became a junior partner of the United States. In 1991, the Soviet Union was a nuclear superpower with global influence, satellite states spanning the globe, and an intelligence apparatus that penetrated every major government on Earth. It ceased to exist within 900 days, 3 global superpowers destroyed in 5 centuries. And historians, economists, and geopolitical analysts have identified a pattern so consistent across all 3 collapses that it functions less like a theory and more like a diagnosis. 7 stages: military overextension, currency debasement, debt spiral, loss of productive capacity, social decay, loss of reserve currency status, sudden collapse. Every empire that has ever held dominant power on Earth has followed this sequence, not approximately. Exactly. The stages arrive in the same order. The symptoms manifest in the same way. The timeline compresses as the empire progresses through each stage, and the nation at the center of the collapse always believes it is the exception. Spain believed its silver would never run out. Britain believed its colonies would never revolt. The Soviets believed their ideology would never fail, and the United States of America in 2026 believes it is different. It is not different. It is at stage 5. Stage 1 was military overextension, and America crossed that line 2 decades ago. Every empire begins its decline by spending more on military projection than its economy can sustain. Rome maintained legions across a border stretching from Britain to Mesopotamia. Spain fought simultaneous wars across multiple continents. Britain maintained garrisons in 70 countries while fighting 2 world wars that drained its treasury to zero. And the United States currently maintains approximately 750 to 800 military bases in roughly 80 countries around the world, which is 3 times as many bases as every other country on Earth combined. Ray Williams documented in his analysis of the 250-year empire cycle that no empire in history has maintained this ratio of military infrastructure to economic output without entering terminal decline. The U.S. defense budget for fiscal year 2025 exceeded $886 billion. That figure does not include the Department of Energy's nuclear weapons programs, Veterans Affairs spending, Homeland Security, intelligence community black budgets, or the interest on debt accumulated from past military spending. When all defense-related spending is aggregated, credible estimates place the true annual cost of American military power above $1.4 trillion. And the war with Iran that began on February 28, 2026, is adding tens of billions more in direct operational costs, while simultaneously triggering an energy crisis that the IEA called the greatest in history. Operation Epic Fury involved Tomahawk cruise missiles at $2 million each, B-2 stealth bomber sorties at $170,000 per flight hour, carrier battle groups at $6.5 million per day, and a naval blockade of the Strait of Hormuz that requires continuous deployment of destroyers, cruisers, minesweepers, and logistics vessels in one of the most contested waterways on Earth. Rome did not fall to barbarian invasions. Rome fell because it could not afford its legions. Britain did not fall to a rival empire. Britain fell because it could not afford its wars. And the United States is currently fighting an unauthorized war in the Middle East, while simultaneously maintaining a global military footprint that costs more annually than the next 9 countries' defense budgets combined. Stage 1 was crossed long ago. Most Americans simply did not notice because the cost was hidden in debt issuance rather than in taxes. Stages 2 and 3 arrived together: currency debasement and a debt spiral that now consumes 1/3 of your taxes. When Rome could no longer fund its military through taxation, Emperor Nero reduced the silver content of the denarius from 100% to 90%. Over the next 2 centuries, successive emperors continued debasing the currency until the denarius contained less than 5% silver. The purchasing power of Roman money collapsed. Prices rose by factors of 10 and 20. Emperor Diocletian responded with the edict on maximum prices in 301 AD, attempting to control inflation by government decree. It failed. The Roman economy never recovered. When Britain could no longer fund its empire through taxation, it borrowed massively from the United States. The national debt surged during both world wars. The pound sterling, which had been the world's reserve currency for over a century, lost that status within a decade of the end of World War II. The Bretton Woods Conference of 1944 formally installed the dollar as the replacement, and the United States in 2026 has debased its currency and entered a debt spiral that mirrors both patterns simultaneously. The Federal Reserve's balance sheet expanded from approximately $900 billion in 2008 to nearly $9 trillion by 2022, a tenfold increase in 14 years. The money supply exploded. The purchasing power of the dollar declined by 26% since 2019 alone, and the national debt has crossed $36 trillion, which is 100% of GDP, a level last seen at the end of World War II when the country had literally just fought a world war. Interest payments on that debt have crossed $1 trillion per year for the first time in American history. That figure exceeds the entire defense budget. It is roughly equal to Social Security spending, and it now consumes 34 cents of every dollar the federal government collects in taxes. 1/3 of your federal tax payment goes to interest on money the government already borrowed, not to roads, not to schools, not to defense, not to Medicare, to interest. And Moody's, the last of the three major credit rating agencies to maintain a perfect rating on the United States, stripped it on May 16, 2025, citing the debt trajectory and the inability of successive administrations and Congresses to reverse it. All three agencies have now downgraded America, for the first time in history, and the Federal Reserve has been operating at a loss for more than 2 years, accumulating over $200 billion in negative equity, sending zero remittances to the Treasury since 2023 after sending $107 billion in 2021. The central bank itself is underwater. Stage 2 currency debasement and Stage 3 debt spiral are not warnings, they are accomplished facts. Stage 4 gutted American manufacturing and turned the economy into a casino that produces nothing. In 1960, manufacturing accounted for approximately 27% of U.S. GDP. By 2023, that figure had fallen to approximately 11%. The United States lost over 5 million manufacturing jobs between 2000 and 2016. Entire industries, steel, textiles, electronics, furniture, auto parts, were offshored to countries with lower labor costs. The communities that depended on those industries, across the Rust Belt, across Appalachia, across the industrial Midwest, were hollowed out. Drug overdose deaths climbed. Suicides climbed. Life expectancy in those communities declined. And the economy that replaced manufacturing was not a productive economy. It was a financial economy. An economy of asset management, derivatives, insurance products, private equity, venture capital, and stock buybacks. An economy where the largest and most profitable companies in America do not make anything. They intermediate. They collect fees. They sell advertising against data harvested from the people who used to make things. In the Spain parallel, the influx of silver wealth destroyed productive discipline. Why manufacture goods when you can simply buy them with extracted wealth? Spain stopped producing. It imported everything. And when the silver ran out, there was nothing underneath. The British parallel is identical. As the empire expanded, Britain shifted from manufacturing to financial services centered in the City of London. When the empire contracted, the manufacturing base was gone, and the financial services could not sustain an economy without the imperial trade network that fed them. The American version of this pattern is the most extreme in history. Financial services, insurance, and real estate now account for approximately 21% of GDP, nearly double the share of manufacturing. The stock market's total capitalization relative to GDP, what Warren Buffett calls the single best measure of market valuation, has exceeded 200%, a level that has preceded every major market crash in the past century. American corporations spent over $1 trillion on stock buybacks in a single year, a practice that was illegal before 1982, artificially inflating share prices while investing nothing in productive capacity, worker training, or domestic infrastructure. And the AI investment boom that is currently driving market valuations higher is concentrated in fewer than a dozen mega-cap technology companies whose primary output is not physical goods but digital services, many of which are funded by advertising revenue that depends on consumer spending, that is itself declining. Deloitte warned in their Q1 2026 forecast that an AI investment bubble could trigger a sharp pullback in business spending if companies reassess potential demand. The productive economy that created American middle-class prosperity has been replaced by a speculative economy that creates wealth for asset holders and poverty for everyone else. Stage 4 is not approaching. Stage 4 already happened. Most Americans just did not feel it until the inflation arrived and revealed that the prices of real things, food, shelter, energy, healthcare, are set by productive capacity, not by financial engineering. And the tariff regime that was imposed starting in 2025 is itself evidence of Stage 4's completion. Tariffs are a Stage 4 response. They are the admission that the domestic productive base has been destroyed to the point where imports must be taxed to protect whatever remains. But the tariffs are also a trap, because the economy that destroyed its own manufacturing and became dependent on imports cannot simply reverse course by making imports more expensive. The factories are gone. The supply chains are in Asia. The skilled workforce that operated the factories has retired, died, or been retrained into service jobs. Customs duties tripled from $97 billion annualized in Q1 2025 to $331 billion by Q3 2025. And the cost was passed directly to American consumers in the form of higher prices on goods they have no domestic alternative for. The tariffs did not rebuild American manufacturing. They raised the cost of living for American families while generating revenue that the government used to offset tax cuts, which is exactly what Spain did with its colonial silver. Extract wealth. Distribute it to elites, tax the movement of goods rather than investing in production. And wait for the collapse that comes when the extraction model meets the reality that wealth cannot be consumed forever without being produced. Stage 5 is happening right now, and it is visible in every survey, every statistic, and every household in America. Stage 5 is social decay. It is the stage where the cumulative damage from military overextension, currency debasement, debt spiral, and loss of productive capacity manifests in the lived experience of ordinary citizens. And every metric that measures social cohesion, institutional trust, and citizen well-being in the United States is at crisis levels or record lows. Pew Research found that only 22% of American adults trust the federal government to do the right thing. That is not a low number. That is a civilization-level failure of institutional legitimacy. When 4 out of 5 citizens do not trust their own government, the social contract that holds a republic together is fraying at a rate that historical precedent suggests is irreversible. Without structural reform, the University of Michigan Consumer Sentiment Index fell to 47.6 in early April 2026, the lowest reading in the entire 75-year history of the survey. Lower than during any war, any recession, any financial crisis, any pandemic since the 1950s. And the deterioration was across age, income, and political party affiliation. Every demographic simultaneously lost confidence in the economic future. Life expectancy in the United States, which was already declining before the pandemic, has not recovered. Americans live shorter lives than citizens of every other wealthy country on Earth, despite spending more on healthcare per capita than any nation in history. Drug overdose deaths exceeded 100,000 annually for 3 consecutive years. Homelessness has risen to levels not seen since the Department of Housing and Urban Development began counting. The birth rate has fallen to the lowest level ever recorded, and Bloomberg reported the United States may see its first population decline in 2026. Americans are not having children because they cannot afford to have children in a country where child care costs more than college tuition in 38 states. 7 in 10 Americans said raising a child is unaffordable, and the wealth inequality that defines Stage 5 is now more extreme than at any point since the Gilded Age of the 1890s. The top 1% of American households hold more wealth than the entire bottom 90% combined. The top 10% own 93% of all stocks. The bottom 50% own 1%. When the stock market reaches record highs, as it did in 2024 and early 2025, the celebration is confined to the asset-holding class. The other half of America watches the ticker from behind a grocery receipt that is 36% higher than it was a decade ago. That bifurcation, a country where the rich have never been richer and the working class cannot afford to eat, is the textbook definition of the social decay that precedes imperial collapse. Not because the poor revolt. History shows that the poor rarely revolt. They withdraw, they disengage, they stop participating, they stop voting, stop trusting, stop having children, stop believing that the system will ever work for them. And that withdrawal is more dangerous to an empire than any external enemy, because it drains the human capital that the empire depends on for its military, its workforce, its tax base, and its democratic legitimacy. And the withdrawal is measurable. Voter participation in non-presidential elections has been declining for decades. Union membership, which historically provided working-class Americans with both economic leverage and civic engagement, has fallen from 35% in the 1950s to approximately 10% today. Religious attendance, community organization membership, civic association participation, all of the institutions that Robert Putnam identified in Bowling alone as the connective tissue of American democracy have been hollowing out for 40 years. And the opioid epidemic, which has killed more than 1 million Americans since 1999, is not a drug crisis. It is a social decay crisis. It is the pharmacological expression of communities that lost their productive base in Stage 4, lost their economic hope in Stage 3, and are now dying of diseases of despair that are unique to late-stage imperial societies where large segments of the population have been economically abandoned. Between 2019 and 2023, U.S. life expectancy fell by 1.5 years, a decline not seen in any other wealthy country. The gap between American life expectancy and the average of comparable nations has widened to the largest in modern history. Americans are dying younger, dying poorer, and dying angrier than their counterparts in every other developed nation on Earth. And the political system that is supposed to address these crises has itself become a symptom of Stage 5. The October 2025 government shutdown lasted 6 weeks, the longest in recent memory, disrupting SNAP payments, delaying economic data collection, furloughing federal workers, and demonstrating to the world that the American government cannot perform its most basic function of remaining operational. Pew's 22% trust figure is not the floor. It is still falling. Stage 6 has already begun, and the dollar's share of global reserves is declining at the fastest rate in modern history. Stage 6 in the 7-stage collapse pattern is the loss of reserve currency status. This is the stage where the rest of the world begins diversifying away from the empire's currency, not in a sudden panic, but in a slow, methodical, irreversible reallocation of global reserves. And it is already underway. The dollar's share of global foreign exchange reserves was 71% in 2000. Today it is approximately 59%, a 12 percentage point decline in 25 years. The People's Bank of China has reduced its U.S. Treasury holdings from a peak of $1.3 trillion in 2013 to approximately $760 billion today, a 42% reduction. Central banks in China, India, Russia, Turkey, Poland, and a dozen other countries have been buying gold at record quantities for 4 consecutive years. The price of gold recently crossed $4,500 per ounce, roughly triple its level just a few years ago. That price movement is not speculation. It is the collective judgment of the world's central banks that dollar-denominated assets are no longer the safest store of value. BRICS nations are actively working to formalize alternative currency arrangements for bilateral trade. China and Russia are settling energy transactions in yuan and rubles. Saudi Arabia has signaled openness to accepting non-dollar payment for oil, a development that, if it materializes at scale, would end the petrodollar system that has underpinned dollar hegemony since 1974. WION News documented that trust in U.S. hegemony and its moral authority is collapsing, and allies are contemplating diversifying trade and foreign exchange reserves. U.S. Commerce Secretary Howard Lutnick said globalization has failed the U.S. economy, but as WION noted, globalization has sustained it until now. The dollar's reserve status is the single most valuable economic asset the United States possesses. It allows America to borrow in its own currency at the lowest rates on Earth, to run persistent trade deficits without currency collapse, and to impose financial sanctions that weaponize the global payments system. Every percentage point the dollar loses in global reserve composition is a slow withdrawal of that privilege, and the withdrawal is accelerating. The 3 credit rating downgrades by Moody's, Fitch, and S&P have formalized the assessment that America is no longer the safest borrower on Earth. 10 countries now hold higher credit ratings from all 3 agencies: Germany, Switzerland, Singapore, Norway, the Netherlands, Denmark, Sweden, Luxembourg, Australia, and Canada. The British pound's loss of reserve currency status took approximately 30 years from the start of World War I to the Bretton Woods Agreement. The dollar's erosion has been underway for 25 years and is accelerating with every war, every downgrade, every deficit, and every political crisis that undermines institutional credibility. Stage 6 is not a prediction. Stage 6 is a data trend with a slope that points in one direction and has not reversed in a quarter century, and the Iran war has accelerated the trend dramatically. Iran's closure of the Strait of Hormuz demonstrated to every oil-importing nation on Earth that the global energy system's dependence on a single choke point, protected by a single military power, is a vulnerability that can be exploited by any nation willing to mine a 34-mile-wide waterway. The 40 countries that convened to discuss reopening the strait are not just seeking a solution to the current crisis. They are contemplating a future in which energy security is no longer guaranteed by American naval dominance. And every country that reaches that conclusion diversifies its reserves, its trade relationships, and its currency exposure away from the dollar. The war did not cause the reserve currency erosion, but it compressed a decade of gradual erosion into 6 weeks of visible, undeniable demonstration that the system the dollar underpins is fragile, and fragility, once demonstrated, cannot be undemonstrated. Every empire believed it was the exception, and every empire was wrong. Spain's Philip II believed that God's favor and American silver made the Spanish Empire eternal. Britain's leaders believed that the empire's sheer geographic scale made it invulnerable. Soviet ideologues believed that the scientific inevitability of communism made collapse impossible. And the American exceptionalism narrative, the deeply held belief that the United States is fundamentally different from every empire that came before it, is performing the exact same psychological function that those beliefs performed for Spain, Britain, and the Soviets. It is preventing honest assessment. It is substituting faith for arithmetic, and it is allowing the pattern to continue unchecked, because acknowledging the pattern requires acknowledging that the United States is not exempt from the forces that have destroyed every dominant power in recorded history. The stages are gradual, uneven, and in theory reversible. No historian or economist argues that collapse is inevitable. What they argue is that the pattern has never been reversed at stage 5 without fundamental structural reform, tax reform, spending reform, military retrenchment, industrial policy that rebuilds productive capacity, institutional renewal that restores public trust, currency discipline that stabilizes the unit of account. And none of those reforms are politically viable in the current American system. Tax reform is blocked by donor interests. Spending reform is blocked by entitlement commitments. Military retrenchment is blocked by the defense establishment. Industrial policy is blocked by free market ideology. Institutional renewal is blocked by political polarization. And currency discipline is being actively undermined by political pressure on the Federal Reserve. The reforms that would arrest the pattern require exactly the kind of governance that the pattern itself has destroyed. That is the trap, and every empire that reached stage 5 discovered the same trap. The system that needs to reform itself is the system that is least capable of reform, because the decay has penetrated the institutions that would need to execute the reform. Rome tried price controls. They failed. Spain tried colonial exploitation. It accelerated the decline. Britain tried imperial preference trade agreements. They could not compensate for the loss of productive capacity. The Soviets tried perestroika. It triggered the very collapse it was designed to prevent. And the United States in 2026 is trying tax cuts funded by debt, a war funded by money printing, tariffs that raise consumer costs, and political capture of the central bank. None of these are reforms. They are the exact behaviors that define stages 2 through 5 of the collapse pattern. They are not solutions, they are symptoms. And the American public is being told they are solutions by the same institutions whose credibility collapse is itself a symptom of stage 5. Mark Schnitzler wrote in February 2026 that the United States is deep into the sequence and that police-state expansion, surveillance capitalism, and political dysfunction that treats government offices as private property are all markers of the late-stage pattern. Ari van Gemeren wrote in his analysis of imperial decline that empires respond to the visible distress of stages 1 through 3, not with structural reform but with edicts, price controls, scapegoating, and institutional decay, and that the state loses the trust of its own citizens before it loses to any external rival. The external rivals are visible. China's GDP in purchasing power parity terms has surpassed America's. China's manufacturing output exceeds America's by a factor of nearly 2. China holds $760 billion in U.S. Treasury securities and is reducing that position methodically. Russia and China are conducting bilateral trade in non-dollar currencies. BRICS is expanding. The global south is realigning. And the American response to all of this has been military escalation, financial sanctions, tariffs, and political pressure on the Federal Reserve. Every one of those responses is a stage 1 through 5 behavior. Military overextension, currency manipulation, debt-funded spending, trade barriers that mask productive decline, institutional capture. The pattern is not a conspiracy. It is arithmetic. It is the mathematics of an empire that spends more than it earns, borrows more than it can repay, prints more than the economy produces, maintains more military infrastructure than its GDP supports, and does all of this while the trust of its own citizens and its global partners erodes year after year after year. Spain took 80 years to complete the 7 stages. Britain took 40. The Soviet Union took less than 3. The compression of the timeline is itself part of the pattern. Each successive empire collapses faster because the global financial system is more interconnected, information moves faster, and the mechanisms that accelerate capital flight operate at digital speed rather than merchant ship speed. The United States has been in the pattern for approximately 25 years. It entered stage 5 within the last decade. The question is not whether America is following the pattern. The data answers that question definitively. The question is whether stage 5 leads to stage 6 and 7, or whether something unprecedented happens and the pattern breaks for the first time in recorded history. Every previous empire bet on being the exception. Every previous empire was wrong, and the speed at which the pattern completes is accelerating with each century. Spain took 80 years. Britain took 40. The Soviet Union took less than 3. Information travels at the speed of light in 2026. Capital moves at the speed of an algorithm. Trust can evaporate in a single news cycle. The compression of stages 6 and 7 when they arrive will be faster than anything any empire has ever experienced. Not because America is weaker than those empires, because the global financial system that amplifies the pattern is infinitely faster than any system those empires operated within. Share this video with every American you know who has a savings account denominated in dollars, a retirement plan invested in American markets, or a mortgage priced off U.S. Treasury yields. Because the pattern does not care about patriotism, it does not care about military power. It does not care about American exceptionalism. It cares about arithmetic. And the arithmetic of the American empire in 2026 is identical to the arithmetic of every empire that came before it at the same stage of decline. Subscribe and turn on notifications.